Good morning, traders. It's Wednesday, February 12th. We got some economic data coming out, or we had it come out here. Inflation seems to be kind of heating up more than expected for January. CPI numbers kind of higher than expected. We can see here the SPY dropping in pre-market, a big down red bar, wiping out the last couple days of gains. The daily chart shows kind of where we stand as we kind of have these descending highs. And each time we get up to these levels, we keep having some type of news hit the market and create a wave of selling. So we'll see how this shakes out. We're probably going to see panic selling on our panic selling indicator. The trend is still up. So usually panic selling is kind of we see the dips get bought. Also, it is going to be a gap down on news, which I do prefer gaps to the downside because gaps generally get filled, meaning the market will open up with panic and we see the market get bought back up to fill that gap. It could be an interesting session for sure. So we are seeing a lot of things drop pretty quick. We've got gold down sharply. Let's just we'll look at GLD. If we take a look at GLD, gold's having a pretty good drop this morning. Kind of had a squeeze up here near that 3,000 mark in terms of the gold spot price, and we've seen it start to pull back, take a bit of a breather. It seems the dollar, if we look at UUP, we can see the dollar moving higher today with a pop on the daily chart. And if we go and take a look over at oil, we got oil down about 1% or so this morning. So some pretty interesting price action going on. Lots of volatility. Expect a lot of fear and emotions driving this market. Big gaps. Although I say it's a big gap, let's just take a look at SPY. Let's just see where we're at in terms of the gap. Let's just go here and grab the last bar, which is right here. So the market is down about 1%. So it is a pretty big gap. That's enough that's probably going to create some serious panic among investors this morning, and we'll see how that goes. But overall, again, a gap to the downside. We tend to see these gaps get filled. It's on news, and definitely inflation, I think, is going to stick around for a little bit and probably continue to go up, especially with what's going on of people, buying all kinds of supplies. I think a lot of data is really skewed. We saw going into the end of the year, people loading up and importing and bringing in tons of product, worried about tariffs. So there's going to be lots of sales and lots of numbers in terms of like shipping and manufacturing numbers could be up. Really, but it's kind of masked because everybody's front loading, trying to get ahead of these tariffs and all these metal tariffs and all this stuff that's going to add to the cost for everybody down the line. So we're definitely going to have these mixed bag of economic data that's totally skewed from entrepreneurs, business owners loading up with inventory to try and save that 5, 10, 20% on their orders. And then, of course, if the economy does start to slow, there's going to be a ton of inventory and nobody's going to be selling stuff this year, and prices start to drop. But again, that's kind of where I think we're headed. But until then, we got all kinds of crazy landmines with Trump and his news and tariffs and economic data kind of going forward here. Other than that, that's kind of about it. We're just going to let this market work itself out. Again, we are seeing the market is down at 600. So pretty much at the 20-day moving average, or this little lime green oversold area. It actually dipped just a little bit below that to 598. So we dipped below this oversold territory, and now we're right at the 20-day. So we'll see how this unfolds. We did pierce this little bit of a pivot low, which probably triggered a bunch of stops. If the market can pierce this low right across here on the SPY from a couple days ago, that would definitely flush a lot of stops during regular trading hours, which is where most of the stops are. Most people don't have stops set to go in pre or post market because it's a great way to get shaken out of trades. So we'll see how things go. We could see some more panic selling this morning. We see some type of sell-off, a break of this low around the 600 mark, run the stops, and then we could see it recover and go forward. Now, we keep getting hit with all kinds of bad data, but the market just keeps rising back. It climbs that wall of worry. And until we break through this resistance area, there's definitely this zone of just the market's just struggling to get through to these new highs. We're up in this upper kind of nosebleed territory that sellers keep stepping in, or news hits that people are spooked and they dump shares really quickly. So we'll see how that unfolds. We also have a member wanting to know more about the different columns here in the hot list. Now, we do have a full-on course in the members area about how to read this, between sentiment, if it's a risk on, risk off, their short-term trend, our longer-term trend for these different sectors. But more specifically, the risk on, risk off was the big question. What does it mean? And more or less, it's telling us that risk on, when it's green and says risk on, it means people are willing to take risk in that sector. People are moving money into that sector. So it's kind of, it's an active, it's a leading sector in terms of it's sucking up money. That's where money's flowing. Risk off means people are dumping shares. They're not interested in it. And obviously, it's probably not an ideal sector to be holding. The trend here is a short-term trend, very small waves in the market. And then this one here is more so, is it in a bullish environment, a topping environment, a bearish environment? What phase or stage is it in overall? So that's kind of how we read that. And generally, we like to see things that are green across the board. So people are willing to dump their money in and put the risk on in that trade. The short-term trend is up and the longer-term trend is supporting it. And of course, you can see here how we've seen that move in gold miners and why they're near the top of the list as money's moving in. And we've got a few others that are up here as well. Hack, which is the cyber security ETF, which really has been trucking up very nice and steady for quite a while. And then the communication sector was one that a lot of people don't follow. We traded this a while ago. It's kind of done the same, had a pretty good correction here, but overall, nice looking chart there. Also, yesterday I pointed out the consumer staples was this one sector that was popping and breaking out yesterday. Today it's pulling back a little bit. You can see this bar in pre-market, but overall it does have a nice chart pattern and it is sloping up. It looks like a fresh move to the upside, and it seems people are nervous. And when people are nervous, they tend to go to these really boring stocks, the consumer staples, all of that stuff. And so we might see this want to continue to move higher and become a defensive play. Now, if the stock market goes down, this will struggle. But we could see, even if the stock market trades sideways, we could see this sector continue to push and actually move up as one of those defensive type of plays short term. Anyways, that's it for now. Talk to you soon. Bye-bye.